Bitcoin BTC is facing heightened volatility as traders await tomorrow's Federal Open Market Committee FOMC decision. The cryptocurrency slipped to around $59,500 on Binance, signaling investor unease as the Federal Reserve prepares to announce its stance on monetary policy. While most analysts believe interest rates will remain unchanged, the market is bracing for a potentially hawkish tone from Fed Chair Jerome Powell. Federal Reserve Outlook. According to the CME FedWatch tool, only 4% of economists expect a rate cut, the first in over a decade, while an overwhelming 95.6% forecast rates to hold steady between 5.25% to 5.50%. The Kobasi letter further highlighted a dramatic shift in expectations. There is now a 36% chance that the Fed won't cut rates at all in 2024, compared to just 3% for months ago. Markets, which once priced in as many as 6 rate cuts this year, now see only one possible cut on the horizon, with the probability of 2 or more cuts dropping to 31%. This shift underscores the Fed's balancing act between curbing inflation and preventing a deeper economic slowdown. Stagflation concerns. The U.S. economy is increasingly showing signs of stagflation, a troubling mix of slow growth and rising inflation. First quarter GDP grew just 1.6%, well below the forecasted 2.2%, and a sharp decline from the previous quarter's 3.4%. Meanwhile, the core PCE inflation index, the Fed's preferred gauge, surged from 2.0% to 3.7%. Powell acknowledged that recent data has not improved the Fed's confidence in inflation cooling, signaling that high interest rates may persist longer than markets expected. He reiterated that current policy remains appropriate for managing risks, hinting at no immediate hikes but also no near-term cuts. Impact on Bitcoin. Bitcoin's performance has closely mirrored these economic developments. After briefly climbing above $64,000 following the launch of spot Bitcoin and Ethereum ETFs in Hong Kong, the rally quickly fizzled as caution set in ahead of the Fed decision. Earlier in the week, Bitcoin slipped below $62,000, driven by stagflation fears and tighter financial conditions. Currently, BTC is consolidating below its 2021 high of $69,000, and technical traders are paying close attention to long-term cycle patterns. Four-year cycle theory. Independent trader Bob Loukas believes Bitcoin is on the cusp of an explosive phase within its 4-year cycle. He notes that BTC is about to close out the second year of the cycle and enter the third, historically the most bullish and explosive period. Bitcoin closes the second year of its 4-year cycle next month, entering the third and historically explosive year of the cycle, Loukas wrote on X, formerly Twitter, on October 8th. Loukas identifies Bitcoin's current structure, a descending broadening wedge, formed since its all-time high of $73,835 in March 2024. He suggests this pattern is a classic setup for a parabolic breakout, particularly as interest rate cuts eventually return to the agenda and institutional investment accelerates. Outlook. For now, Bitcoin remains sensitive to macroeconomic signals. The Fed's decision tomorrow is unlikely to bring immediate relief, but it could set the tone for risk assets going into 2025 if Loukas' cycle analysis proves correct. Bitcoin may be preparing for a major uptrend, though timing that breakout will depend heavily on global liquidity conditions, inflation data, and investor confidence. In the short term, Bitcoin traders are advised to watch the $59,000–$62,000 range closely for signs of either deeper consolidation or the start of renewed momentum.